Beijing is responding to the Biden administration after the U.S. launched another round of chip restrictions on China. On Wednesday, China's Ministry of Foreign Affairs rebuked the U.S. Commerce Department's edit curbing the further sale of advanced AI chips. The restrictions include 2 products from NVIDIA. China says the restrictions served nothing more than political purposes that violated the principles of the market economy and fair competition. The U.S. says the new restrictions were meant to close existing loopholes to the rules that were already in place. China's Country Garden has missed a final deadline to make an interest payment on a dollar bond. The real estate giant had until midnight Tuesday to make that $15 million payment. I guess they missed it. Country Gardens is now expected to default, which would lead the company to cross default also on other bonds. The company says it's unlikely to meet all of its offshore obligations. The imminent fall of the company would be the latest in a slew of Chinese property developer defaults that have plagued the real estate sector. For more on all this and the Chinese economy, we welcome back Yan Liang. She's the professor in economics at Willamette University. Good to see you again. We have talked about the real estate market before in China, and every time we talk about it, we often say, well, things are getting better. There'll be some more things that will help the investors or help the companies. I mean, at some point, whether not enough can be done or this just has to play out on its own, but this Country Garden news seems to be buried in a lot of headlines. It seems to be a big deal to me.
Yeah, good to talk to you, Phil. It's been a while. So I absolutely agree with you. I think the real estate sector is still on the way of restructuring and some sort of cleaning up of some of these projects. So we're not yet at the bottom yet. But I think at the same time, what the authority is trying to do is to really contain the risks and trying to make some of the important unfinished projects to be finished, to be completed. So then they'll be able to turn these projects to the home buyers who have already prepaid their housing units. So I think all these are very important, and also really trying to contain some of these risks, not to have the widespread, banking crisis, so to speak. But at the same time, I don't think, the government is going to sort of bail out, quote unquote, the real estate sector, because I think they really insisted that this sector has been over-leveraged. They have overexpanded, and there's too much speculation. There's corporations that are buying these houses not for any investment values, but really for speculations, and so do people. So I think time is ripe for cleaning up of the sector. But of course, because the sector is so important, very careful measures have to be taken. Now, when it comes to making up for the sector, one interesting stats I have seen is that a lot of bank credits now is going into the industrial sector instead of the real estate sector.
Right.
And when you look at investments in infrastructure and also in industry, they have gone up by 6.2% in the first 3 quarters, and overcompensating for the decline in the real estate sector, which is negative 9.1%. So we still have overall positive growth in investment. But consumption could be in some ways dampened by the lack of wealth effect, because people have about 2/3 of their wealth in the real estate in housing. So that could in some ways dampen consumer confidence. But the good news is, we have seen retail sales to go up by 5.5%. So that is good news.
The economic data you were talking about, I mean, yes, I will say that some of it seems to be at least more positive than it was 6 months ago. But at the same time, the expectations for China is to do better, right? Okay isn't necessarily good enough. And you still have the problem of input costs. Oil, a lot of people don't realize China needs the oil just as much as the U.S. does. And when oil prices go up or go high, that's not necessarily a good thing.
Well, I think it really depends on how you looked at it. I think, China's economy is not like other countries that have this inflationary pressure. If anything, I think China is hoping to reflate its economy. And on the other hand, I think, China's growth in the demand for energies is pretty much met by the growth in the production of the renewables. And also, China is not cutting ties with, Russia or other oil-producing countries or gas-producing countries. So I think in that case, China is in a better position than many of these other countries. But I agree with you. There are definitely challenges. And I definitely agree with you. The market is having high expectations for China, but at least, when you look at the Q3 growth rate, it actually beats the market expectation of 4.5%. It actually grows by 4.9%. And especially when you think about all the media that have been talking about the end of China's miracle, the China peak, and so on and so forth. So I think, it's probably premature to say that China's economy is coming to a collapse. This new data in this quarter, I think, seems to suggest that the recovery is gaining some momentum. But of course, like I mentioned, there are all these other challenges with real estate, also with debt issues, especially at the local government level. So I think it does take more vigilant policies to manage the economy, not only in the rest of this year, but also going forward.
We've had a lot of coverage on the Belt and Road Initiative, and there's obviously a economic impact because China is doing this because they want to do more business with these countries on some level, right? Whether it's to build things or trade things or sell things. I got to think ultimately over the next, say, 5 to 10 years, this is going to be a bedrock or foundation of perhaps future growth to help the Chinese economy?
Absolutely. When you look at the external demand, when it comes to China's trade, it has been going down. Well, in dollar terms, it has actually gone up in the first, 7 months of this year, 9 months, sorry. But still, I think, when you look at trade with EU, it's down by 7.7%. With, the US is down by 14% so far this year. But the trade with the BRI countries have gone up by 3% this year so far. So I completely agree with you. I think the BRI has also, the white paper that China released also has provided some data that, in the past 10 years, China's trade with the BRI countries reached $19 trillion, and with the annual growth rate of 6.4%. And in the BRI forum, President Xi also announced that, he expects that the trade in the next 5 years with BRI countries is going to even go up to reach 23 trillion in the 5 years mark in terms of trade in goods. So I think, yes, it does hold a lot of potential when you build the roads, build the ports, connect through air and real land and sea. You are cutting the cost of trade, and you're also building that connectivity to facilitate trade. Not to mention, a lot of the investments, a lot of the industrial upgrading, that would all help to improve not just the quantity of trade, but also quality of trade.
All right, super cool stuff. Yan Liang, good to see you. I'll see you soon. Thank you.
Thank you so much.